So the Federal Reserve cuts their short-term interest rates yesterday by a quarter point, and mortgage rates went up. Why did this happen? Well, this happened last year, almost a year to the date, when the Federal Reserve cut interest rates 50 basis points, and we had rates shoot up. And the reason for that was the stock market and the bond market looked at this as an inflationary move. They thought inflation would go up, and they had to protect themselves. This time, the stock market rallied. Mortgage-backed securities had already priced in the quarter point drop, and that's why interest rates have gone down over the last 3 weeks. But when they did announce and the stock market rallied, the mortgage-backed securities said, hey, wait, we've got to draw money back into mortgage-backed securities to create liquidity, and that's why it went up. It wasn't an inflationary move. It was a liquidity move to bring money back into the market. Mortgage-backed securities don't move independently. It looks at what's going on in other markets, such as the stock market, what's happening in short-term interest rates, and it will try to protect itself from long-term risk. And this is where the pricing comes from. So bottom line, mortgage bonds don't wait around for markets. They try to predict markets because they are the long-term play. Now, the Fed meets twice more this year, October 29th and December 10th. And the Fed futures are predicting an 88% chance that the Federal Reserve will cut interest rates by a quarter point in October, and a 78% chance that the Federal Reserve will cut interest rates by a quarter in December. That's another 50 basis point cut. I don't think we're going to see what we had last year when this happened and rates shot up. I think rates will continue to trickle down because our economy isn't as strong. Unemployment's at 4.5%, inflation's below 3%. In their statements, they say that the bigger risk right now is the job market, unemployment. That's why I think rates are going to come down. If rates do come down, we're going to see more buyers hit the market and more refinances happening. They've already started. If you're looking at refinance, you want to get your paperwork in now instead of waiting till your target rate is there. You want to be ahead of it. Be prepared to pull the trigger because sometimes the window of opportunity is a day or an hour. If you have any questions, give me a call or go to kurtkessler.com.